Today is a big day. Block officially is joining the S&P 500, and they hold 8,584 Bitcoin on their balance sheet. But not only this, Block is doing something tremendous. They are beginning to roll out Bitcoin payments officially as of yesterday to over 4 million small business merchants across, I believe, America. But what's most interesting is Block for a very long time has been working towards making Bitcoin everyday money. As we know, Jack Dorsey, their CEO, is very focused on Bitcoin adoption and decentralized technology. And Block put out a video this last week, a blog discussing what will make Bitcoin everyday money. And I'm going to explain some of that in this video and talk about what the future looks like for Bitcoin payments right after I break down what Block covers. So let's dive in. I'm going to go through this quick, and then I'm going to give you an idea of what the future looks like for small businesses that are using Bitcoin. So Bitcoin's original purpose, Bitcoin was never created for speculation. It was designed to be peer-to-peer digital cash. The vision is open, fast, low-cost payments free from centralized control. And it's about empowering people and not middlemen. The current systems are surrounded with all of these intermediary banks and these people in between you paying your friend or business, hence all the fees. Now, why can Bitcoin be everyday money? Let's break down why. Bitcoin's decentralized. There is no point of failure. Purely decentralized. You can download Bitcoin Core at home, run the software, and run it all by yourself. You do not need a bank or permission from anyone to use Bitcoin. Number two, it's permissionless. Like I just said, anyone and everyone can use it that has a device and an internet connection. Part three, it's transparent. Every transaction is verifiable. Because you're running the software locally yourself, you can verify every transaction historically and every transaction that you are doing. Four, it is scarce. There will be and only ever be 21 million Bitcoin, and this ensures a predictable supply. And the supply curve goes out into about 2,140. And if you're not familiar, Bitcoin has what are called halvings, where every 4 years, the supply that is issued from the network is cut by half. And fifth, Bitcoin is resilient. It works across borders 24/7, never can be shut down. It's funny, whenever you see public markets get frozen or shut down, Bitcoin's still cruising, baby. Now, what is holding Bitcoin back? We got to dive into the reality of what's going on right now and some of the hindrances and just, let's say, headwinds that Bitcoin is running into. Number one, for global adoption, especially as it relates to businesses and everyone using it, there's unclear licensing and regulation. So companies that are offering Bitcoin services are operating under confusing state and federal laws. Now, the good thing is we're starting to see clarity around the Genius Act for stablecoins, as well as market structure, which is getting done this week. I believe it's tomorrow. Trump is going to be signing the market structure for crypto, which is a very big deal. So regulation and frameworks are coming. Two, there has to be one clear national framework, not 50 different interpretations that every state runs, which we should begin seeing rolling out. Number four, the Clarity Act. This is a big one. It helps define Bitcoin as a digital commodity under the CFTC and not the SEC. And then lastly, these frameworks and clarity, it protects builders like Bitcoin miners, developers, wallet providers, and it takes the burden off them and puts the burden on actual custodians, people who are holding and handling funds within the financial system. So one of the next pieces is that core infrastructure needs protection. So many Bitcoin participants, they don't hold your money, they just build the tools. So you can think of lightning nodes like wallets and apps. So one thing about Voltage, the company I work at, is we make it very easy for anyone to just spin up a node in like 1 minute. And whenever they spin up the node, they have their own keys. We're not the custodian holding everyone's funds that use us. You can spin up your own node. You've got your own private key. You're managing your funds. We don't have it. So this is very important. The core infrastructure, like the things we're building, it needs protection. Number two, these companies should not be regulated like banks, because clearly we are not holding funds. We are not sending funds for people. When you spin up your own node with Voltage, you're sending and receiving your payments. It's not us. And third, about core infrastructure that needs protection. Number three is Congress can protect innovation by clarifying that non-custodial builders like Voltage are not money transmitters. So this is great to have some of these things unfolding for companies and builders like us who are the core infrastructure that are building the foundation for this entire industry functioning. Now let's go into another big point. Bitcoin needs fair tax treatment. So right now, every purchase with Bitcoin triggers a capital gain tax. This is one reason a lot of people use it as a store of value and they don't just use it day to day for spending. No one wants to be taxed when you're just using money. And Bitcoin is better money. It does not get debased by 2 to 8% or more a year like the dollar does. There's an incentive to just go spend dollars because they're worthless, or you go invest in like random collectibles or the stock market. Bitcoin is money, and it should not trigger a capital gains tax when you're spending it. Now, two, let's talk about this. Imagine paying tax when you buy a coffee. That's how the law functions today, and that is not feasible for people. And what's happening right now is we're seeing a de minimis exemption that would make small Bitcoin purchases tax-free, like if you were spending a foreign currency. The world operates on hundreds of currencies, and when you go to spend them, you're not taxed, even though the value between the currencies is constantly fluctuating. It should be just like spending any other currency, no tax. Now, lastly, if all these things happen, this makes Bitcoin practical for daily use, not just for long-term holding. And like I said at the beginning of the video, Square is rolling out Bitcoin payments for over 4 million small business merchants. And what this means is the business owner can say, in the back end of Square, they can say, I don't want to receive Bitcoin, I just want to receive dollars, or maybe I want to receive 5% in Bitcoin or 95% in dollars. The business owner has optionality, but they don't have a way to say no. This is going to be default in Square payments. So anytime you walk up to a Square point of sale system, if you have Bitcoin, there's going to be a Bitcoin option. There's not the ability to turn it on or turn it off. It's just going to be there. And the business owner has every first right of refusal to say, I want to receive the money in dollars, or I want to receive the money in Bitcoin. And we'll dig more into that later in the video when we talk about the future of payments and how this impacts small businesses. Now, I want to talk a little bit about some of the other points that Square talked about in their paper. Companies like Block, Square, as well as Voltage, we are investing in Bitcoin infrastructure, helping empower entrepreneurs and businesses to take advantage of this. One thing in particular that Square is building is mining and self-custody tools, and they're making payments possible inside of Square. One of the cool self-custody tools that Square built was the BitKey. I don't know if you've ever used this, but it's pretty sweet because whenever, it might be dead, but whenever you hold it to your phone, there's an NFC functionality, and you can manage a multi-sig from your phone with this little device. So it's pretty interesting device. But in order for all of these things to scale, there must be regulatory clarity like we talked about. Now, big picture, about 30 to 45 seconds left before we start talking about the future and what all of this means for business. Bitcoin is solving real problems for people. It allows for borderless payments, so global instant settlement, final payments with no chargebacks. Financial inclusion is important. I don't know if you know this fun fact, but a brick and mortar bank, the cost they pay to acquire customers over like $250. Square and Cash App, they acquire customers for under $40. And more importantly, as it relates to people, whenever you get a mobile phone, you can just go download the Cash App and use it. But as you know, whenever you join Cash App, there's still the KYC rules where you've got to upload your social, your name, email, blah, 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 give up all your personal information. A lot of people may not have this. So what Square is doing is making it possible where businesses can accept Bitcoin, and someone who just has a phone and some Bitcoin on their wallet, maybe they don't have all this KYC information, nor do they want to give it up, they can now go participate in the economy and spend money without giving up all of their personal info. Very important for a lot of people in the world. And lastly, you have control over your own money. If you're familiar with Cyprus in 2014 or 15, their central bank did what is called a bail-in. Their economy was in trouble, and all of the deposits in the bank, the government literally took them, stole them from their citizens. My neighbor, when I lived in Fort Collins, Colorado, he was a professor at CSU, and he told me the story of his mom and dad who had their life savings completely stolen, and it impacted their family drastically. So things like this are real, and it is important for individuals to be able to be sovereign and hold their own money. So if we want Bitcoin to grow beyond an asset and become a real medium of exchange, what do we need? Clear federal rules, fair tax treatment, and protection for infrastructure builders. So, what can we do? It's more than just policy. It's about freedom to transact, freedom to build, and freedom to choose your own money. So if you appreciate this, please, as of now, go ahead and share this video. Pass it along to colleagues. Help people understand these things. It's going to be important to make Bitcoin everyday money for us to achieve and do these things. And I'm grateful for companies like Block and companies like Voltage. This is the whole reason I joined the company, is because I believe this is one of the biggest problems that need to be solved. And I'm so glad to be taking part in that. So let's do it. Now let's dive into what's really important, the future. Let's be a futurist, put our little magic hat on. So what I foresee happening, and this is my personal opinion, is Bitcoin will become everyday payments through Square. And one of the more fascinating things that really got me excited about Bitcoin 2025 was Cash App reported that 25% of their Bitcoin payments were happening over Lightning. So the Lightning network, Bitcoin's layer 2, which enables instant global final settlement payment with near zero fees, the Lightning network is thriving. It's doing very well, and Cash App has built a good business around Bitcoin and leveraging Lightning. And the exciting thing about the Lightning network is it's a multi-currency, multi-asset network. So what does that mean? Well, the Lightning network, it's capable of you can issue other assets on top of it. So while it's native Bitcoin, right, you can leverage the Lightning network to issue Tether, which is the world's largest stablecoin, or USDC, or Fartcoin, whatever you want to do. You can issue it on the chain and then send it over Bitcoin. Now, this means quite a few things. Number one, in some ways, it obsoletes other crypto chains. There's not necessarily a reason to have a centralized chain that is created by a CEO, a team of engineers, and a bunch of venture capitalist insiders. There's a way to actually just put all of these other cryptos on top of the Lightning network, and they can send globally in the best way. And why is this even a reasonable thought to have? Well, other crypto chains have what is called a global shared state. And all this means is, imagine if you were walking around as a human being, having to understand everything that was going on planet Earth before you could just make your everyday decision. Doesn't that sound almost like war in your head, or chaos, or just stress and anxiety? It's impossible to even fathom knowing and understanding everything going on in the world just to do what you want to do. This is what a global shared state is like. It's impossible to achieve global scale when everyone has to be aware of what every other economic participant is doing. But what the Lightning network does is it's a peer-to-peer network, meaning you only need to know what your peers are doing, meaning the peers that you are connected to with channels in the Lightning network. You only need to know what they have done. And this is very lightweight, very simple, very easy, and very scalable for businesses to use and individuals. It makes it affordable to run a Lightning node versus a Solana node or an Ethereum validator, which those can be incredibly expensive to do. Insane. Now, when Tether comes to the Lightning network, this is going to be a very big deal because there's a lot of exchanges, payments companies, and payments just across the world, in Africa and other countries where majority of their crypto volumes are over Lightning or they're over Tether. So now, because Lightning is working at scale for enterprises like Cash App, Coinbase, Kraken, and others, when Tether comes on top of Lightning, what does this do? So let's take a step back and go back in history. Well, the Lightning network, it was introduced 6, 7, 8 years ago, and there was a white paper. There's this idea of let's build a peer-to-peer decentralized payment channel network for instant global settlement of Bitcoin payments, so we do not have to wait for a 10-minute block time. Well, at the very beginning, it was bootstrapped by a lot of plebs, just normal people who were like, hey, this is interesting. I'm going to put my Bitcoin into channels and try to send and receive payments. Whenever there's not this network effect, meaning the more participants that are within a network, the more resilient, the better it becomes, the more valuable it becomes, the more impactful it becomes. Because there were very few people and no one really grokked or understood how to successfully use Lightning, there were many failed payments, as you can imagine. But what has happened over the last 6 to 7 years is Engineers have built solutions to solve some of these problems. Individuals who participate in the network, or businesses who participate in the network, they've learned how to manage channels properly and utilize it. And we're at the point now where companies like Amboss, who is a liquidity provider, data provisioning company, as well as a company that helps with compliance, they have AI automations that help you run your own node. So you could run your own node with Voltage, for instance, non-custodially. You hold your own keys. You can deploy your own Bitcoin into your node, and the Amboss product Rails attaches their AI to your node and helps it place and allocate liquidity where it needs to be, and sells liquidity on your behalf. So all of these toolings are being put in place that make it reliable. And we have data in a Voltage report that we've done with Fidelity Digital Assets. Yes, Fidelity, one of the biggest money managers in the world. We did a report with them based on some of the Voltage data, because we handle about 30% of the Lightning Network payments through our infrastructure for our customers. There's tremendous success within the Lightning Network where, let's just say you're sending a payment and it goes directly to who you're paying. Incredibly cheap fees. It's like, a tenth of a penny or less. Once you start going through 1, 2, 3, 4, 5 hops, so it's jumping through peer to peer to get to the end destination, that's whenever costs can go up. That's when the speed goes down a little bit. And that's just whenever there's a chance for a failed payment. But what enterprises are doing today is they're opening direct channels to other enterprises. Individuals, they're open direct channels to folks who they pay often, or they're just trying to understand what's the quickest way to get my payment successful, basically. And we're achieving that at scale, where you're seeing 98, 99% success rate of payments, and it's getting higher every day. You can go back and look at the last 2 to 3 years of reports from River, Breeze, K33, as well as the one that Voltage has done, and it's just up and to the right, the growth. Now, just to wrap this up and put a bow on it, because we are 17 minutes in here, what we're going to likely see happen is clarity on the Bitcoin side. This is going to make it easier for businesses like the Bitcoin Treasury, which is the hottest thing in the world right now. It's going to make it clearer for businesses to buy and hold Bitcoin. What are businesses going to do with this Bitcoin? They're going to use it as a store of value, obviously, but they're also going to deploy it into the Lightning Network to earn yield. If you remember that Amboss Rails product I mentioned that efficiently allocates capital and sells liquidity for Lightning, you can earn 1 to 4% yield on Lightning right now. So these businesses are going to help participate in the Bitcoin economy, deploy their capital, and make Lightning more resilient. Next, beyond that, what's going to happen is Bitcoin price is going to continue to rise. The greatest marketing campaign for Bitcoin is number go up. So what does that mean? Well, what it means to me is as the price goes up and more people understand it and they see it's not this passing fad, it's here to stay. As Lightning is scaling and getting more reliable, Bitcoin payments become standard everywhere. Square is adding it to their terminals. People will be able to spend Bitcoin. Other companies will be doing the same thing. And this is just where I see the future heading. There's a lot of moving pieces that have had to be put into place, and we're starting to see them put in place. But overall, I hope this is helpful. It's exciting that Block is going public. They're joining the S&P 500 today. They're working actively towards Bitcoin being money in the real world where people can use it. And infrastructure providers like Voltage, we're just excited to be able to, expedite this process by giving enterprises and businesses the tools they need to go to market with Bitcoin swiftly, with confidence, and without all of these headaches and issues, so that they can have reliable payments. Because the most important thing is making customers happy. You wouldn't believe this. There's over $2 trillion yearly of failed software deployments. So it's important for things to be done right. And that's exactly what we're doing at Voltage, making it so businesses do not have to deal with those headaches. But I hope this is helpful. It was a lot. You're probably drinking from a water hose right now, but if you have questions, share them below. Please do share and help others learn about Bitcoin. But I'm grateful for your time. Thank you. And we'll see you next time. Bye.